On today's hot sheet, I'm discussing home price indices from S&P, CoreLogic, Case-Shiller, and FHFA. The Housing Vacancy and Homeownership Report for Q2 2025 is out. We'll break it down. Today is Tuesday, July 29, 2025. I'm Byron Lazine, and the hot sheet starts now. Live from Connecticut, right off of the BAMX role play, members only role play. Let me know in the live chat if that's where you're coming in from and where you're tuning in live from. I see Montana. I see Texas. I see Arkansas. Chicken country. Haley, do you know Arkansas was chicken country? Never knew that myself until I watched Billions. The Chicken Man. Great show. All right. CoreLogic Case-Shiller is out. This is the gold standard for pricing. It's rear view mirror pricing. It's months old data. It's why we look at fresh week over week data, certainly on Mondays, but we got to respect Case-Shiller and FHFA. That's kind of the gold standard at which, the markets look at where are prices. And so again, I like the week-to-week data, but we'll take a look at this. Big week here. Obviously, Fed starting to meet. The FOMC's meeting today and tomorrow. Thursday morning, we'll break all of that down. Expectations unchanged from yesterday, if you were wondering. There will be no Fed interest rate cut. Almost a 97% chance. All right. S&P CoreLogic. Home prices. The home price index for May of 2025 records a 2.3% annual gain. It's a slight decrease from the previous reading in April. This number is expected to move down. Remember, Logan Motoshami from Housing Wire, his estimate is 1.7%. Realtor.com came out with what their mid-year projection, getting down to I believe 1.5% was on the mid-year that we looked at last week. But a lot of these projections, this is actually hard data from May. Obviously, it's 2.3% gain. A lot of projections right now are coming in right around 2% or under it. So this shows us this declining month over month, declining annual gains is showing us what the analysts are projecting, that this number will continue to move down and settle around 2 or under 2. You have under 2 for home price increases on the year. That's essentially net negative home values when you factor in inflation. Okay. This is down from a 2.7% annual gain in April. So the slight decrease, I would say that's a little bit more than a slight. It's almost half of a point. The 10-city composite saw an annual increase of 3.4%, which is down from 4.1%. So a little bit wider gap between April and May for the 10-city composite, now down to 3.4% annual gain May over May. The 20-city composite had a 2.8% year-over-year increase, and that's down from 3.4% the previous month. New York continues to be the highest annual gainer among the 20 cities, with a 7.4 increase in May. Chicago, Detroit annual increases of 6.1 and 4.9. Tampa continues to be the lowest returner on the 20 city. And it's not that they're returning. They're not. They're in the negatives, 2.4% down for Tampa. So as hard as the South Florida, Southwest Florida real estate market has gotten, when you look at Tampa, and I get it, Cape, we can point towards places like Cape Coral, being really negatively impacted and all of that. When we look at a major growth area like Tampa, where DOM, days on market, is increasing, no question about it. Buyers and sellers are both hesitating in a market like that. But when we zoom out and look at what's happened year over year, Tampa only at negative 2.4%. Now, you don't want to see home values going down, but 2.4% in a market with that much inventory isn't end of the world stuff. Okay. All the doomers that say real estate's going down 30, 40%. Tell me how, just tell me how that scenario plays out. Boomers control $19 trillion of real estate. 40% of homeowners have no mortgage. I don't know, about 70% of the mortgaged have a really low. Like, tell me how this gets to a 30, 40%. New listings we reported yesterday nationally are at 70,000. During the great financial crisis, they were coming on per week at 250,000 to 400. We're in a totally different market, and we're going to see downward price pressure, and in some spots, even negative price pressure, but not huge dives off a cliff as it relates to price. The other cities on the 20-city composite that are in officially the negatives for year-over-year change would be Dallas at about 0.5% down. Denver is 0.01% down. That's basically flat. San Francisco, a little over 0.5 point down. And then, of course, Tampa. All other cities, 16 of the 20 Case-Shiller 20-city composite, are in the positives. Again, New York being at the top of that list. Here is your May, April change, so we can kind of see a trend here that we expect to see moving throughout the year, which is your month over month change, where you're going to see more negatives as this number moves down. Again, the 2 point, what are we at? 2.3. What did we say here? Yeah, the 2.3% annual gain, remember, was at 2.7% in April. So to get down to, from 2.7 a month ago to 2.3, you have month over month changes. And you are seeing most cities here have a negative switch up month over month. Not meaning they're going into the negatives, meaning the annual gain is getting smaller. And then in some of those scenarios, a handful of them, you are seeing that annual decrease. All right, FHFA comes out with their report same day. FHFA home price index is down 0.2% in May. So FHFA looking at this a little bit smaller. This is from the Bill Pulte agency. I'm sorry, the FHFA, Federal Housing Finance Agency. Bill Pulte runs it. He's an aggressive follow on X, of course, with the the Trump administration. The FHFA home price index is down 0.2% in May. So Case-Shiller was down 0.4%. It's up 2.8% from last year versus Case-Shiller 2.3. So a little bit different analysis here from FHFA and Case-Shiller. Okay, one of my favorite visual trends that I look at every single month is this one here. Okay, 1991 to present. Where do you think home prices are going in the future? If you're educating a buyer, I don't know. You tell me. Like, where do you think they're going? Even if they go down, if we have a 100-year mortgage crisis, what do they do after that? They go back up. Okay, and over time, they continue to move up and to the right. If you're buying off of the next 8, 10, 12 years, you tell me where you think your home value is going to be in the future. I mean, I can't predict the future, but I can certainly look at that line and take a wild guess. Here are the regions according to FHFA. This is the blue bars. If you're watching on YouTube, by the way, a whole bunch of you guys that watch, I forget what the percentage is, it's over 50%, aren't subscribed. Love for you to hit subscribe and hit that notification bell for bringing you value with what we're doing from BAM and all of our content. Love for you to just that's a free and simple way to support us. Throw us that subscribe and hit the notification bell here. But if you can see this on YouTube, the blue bars, that's the price change from 23 to 24 versus the price change from May 24 to May 25. So all regions across the U.S., all the major regions broken out by FHFA, went up more from May 2023 to May 2024 in price gain appreciation than they have over the last 12 months. The U.S., for example, May 2023 to 24 went up 5.9%. The last 12 months, as of May, the US has gone up 2.8%. Every region is reflective of that. We're getting further away from these bigger, chunkier gains on home price appreciation, but we're still seeing appreciation across all regions. The Pacific Mountain region, we're up 0.6 and 1.2% respectively. West North Central, West South Central up 3.8% and 0.9% respectively over the last 12. East North Central, East South Central 5.2 and 4. New England 5.3, Middle Atlantic 5.9, South Atlantic 1.4. The regions with the least amount of inventory, think New England, think Middle Atlantic, are seeing the biggest gains on home price appreciation, and we would expect that to remain true throughout the year unless inventory somehow dramatically shifts in those regions like it has obviously in the Sun Belt states and other locations. All right. Let's get into this report here from the this is from the US Census Bureau. So two reports were released yesterday at 10 a.m. So after we signed off on the hot sheet from the US Census Bureau, one being the quarterly residential vacancy report and quarter two home ownership. Okay. So really interested in the vacancy side. Home ownership doesn't tend to change all that much, but we'll take a look at it anyways. Rental vacancy right now at 7%. Okay. Now we've seen where are builders starting to build right now. Well, they're cutting down on single family homes and getting back into multifamily because with the rates, they're saying, hey, we don't have buyer traffic, so we got to build something. We'll build more apartments. But look what's going on with rental vacancy rate. It's up to 7%. You don't want that in double digits. That would mean you've got a little bit too much inventory out there on rentals. Homeowner vacancy rate at 1.1%. That's a really low number. And home ownership rate at 65%, typically where we do see that. So rental vacancy rate is increasing here over the last over this year, essentially over the first half of this year. Nowhere near where we were, obviously, in the 2009, 8, 10, 11, 12 years. And even leading up to that, we had a higher vacancy rate where it got up over 10% in 2004. Remember, everybody was buying homes in 2004. This number has come down throughout the recovery, really dipped low during COVID, obviously, when it was nearly impossible to, evict tenants. And now we're seeing that number increase due to new construction of multifamily, as well as, being well past COVID. Homeowner vacancy rate for single family, and this is at basically the lowest level recorded in the last 25 years, near lowest levels. If you take COVID out of it, it is the lowest level homeowner vacancy rate for single family homes that were owned. So second quarter of 25, 7% for rental housing and 1.1 for homeowner housing. Rental vacancy rate higher in the second quarter of 24, 6.6%. And then not different on the first quarter, 7.1% was the first quarter, so slightly down. Homeowner vacancy rate of 1.1 was higher than the second quarter of 24 at 0.9%. Home ownership rate of 65 is not statistically different. And you can see that here on the table as those numbers don't change much. Here's some median asking rent for vacant rent units. $1,500, just under $1,500. That is starting to stabilize here over the last couple of years. We're seeing that in real-time reporting from Realtor.com and others, that asking rent is in fact actually moving down. This is specific to vacant rent for rent units. And that price has obviously gone up considerably over the last 5 years, but stabilized here over the last couple at right around $1,500. In the second quarter of 25, the median asking sales price for vacant for sale units was $346,000 after peaking recently at $375,000. Okay. We've got a little bit of data here by region. rental vacancy rates per region: Northeast 5.7, Midwest 5.5. The South, where the majority of this building has gone on, the building boom of the Sun Belts, at 8.4. Those are second quarter of last year, and 5.5. Now we move to this year. The South's up to 9% vacancy rate. Midwest is up to 6.6, jump up from 5.5. Northeast, where you continue to see a lack of inventory, moves down from 5.7 to 5.2. And the West moves slightly up, 5.5 to 5.7. Homeowner vacancy rates. Curious what the South is going to be. Moves up from 1.2 last year to 1.3 this year. So still not a major concern coming in any region. All other regions are lower than the South. When you look at homeowner vacancy rates, not a major concern that we're going to see. Oh, we're going to start seeing foreclosures again. Foreclosures still persist at all-time lows. That remains to be the case. Okay. Estimates of total housing inventory for sale in the United States, according to this report, it's only 15,000 vacant right now, 15,500 vacant homes. Year round 11,000, for rent 3,500, for sale only 950. So these numbers are pretty low on those vacant for sale homes. Quarterly home ownership rates and seasonally adjusted home ownership rates is going back to 95. Home ownership obviously much higher when mortgages were being given out like trick-or-treat candies at Halloween time. I mean, anybody could get them, and then obviously plummeted all the way down to 63% during the recovery. That number has now since obviously gone up to 65. All right. Taking a look here at home rental vacancy again by region. Again, the South leading that charge, and then home ownership rates by region. The Midwest up near 70%, a tick down from last year's 69.5, is the highest region for home ownership. The South coming in below last year's number, as high as 66.6%. Again, boomers own $19 trillion worth of real estate. They own a ton of it in the South. Lowest home ownership rate is in the West, followed by the Northeast, where values are the highest. United States is a tick below where we were last year, 65.6 to 65% on home ownership rate. All right. A little bit of news here. What's going on over the last 24 hours? We were talking yesterday about the Fed obviously meeting this week. Huge week in economic news. And this one was interesting here. If you look at Scott Bessent yesterday disclosed the U.S. has achieved its first June budget surplus since 2015, amassing massive tariff income of $27 billion last month. Found that interesting because obviously what we're going to hear tomorrow, most likely from Jerome Powell, is that we're still in a wait and see mode. And that's the reason that there isn't going to be a cut tomorrow on the federal funds rate. This is from Eric Hauser of Taylor Morrison, Chief Operating Officer. This is just as recent as July 23rd earnings call. Builders have been beat up. We went through it yesterday. They've got 10 months of inventory, yet Taylor Morrison not playing the Jerome Powell blame game, blaming tariffs. In fact, quote, says tariffs have not had a meaningful impact to our horizontal costs. And in fact, these costs have moderated and access to trades has eased. They're a giant home builder ranked 467 on the Fortune 500, $6 billion market cap. We have a comment here, only because demand has plummeted. Well, there's obviously demand plummeting, but you're also looking at a chief operating officer who has to answer on an earnings call what's impacting their costs, and could have taken the easy out card on blaming tariffs. You're going to see that card being played tomorrow from Jerome Powell. We'll cover it on Thursday morning. At least a 97% chance from CME Group that Jerome Powell will not cut. And we know last month, Polymarket says 97% chance. We know 45 days ago, last meeting when he didn't cut, he blamed it on the tariffs. We've got 90 days of tariff data. Scott Percent shows June first budget surplus. So tariffs haven't impacted inflation, and in fact are actually bringing money in. It'll be interesting to see what questions are asked of Jerome Powell tomorrow afternoon. We'll break it all down on Wednesday in the presser. 4.374 on the 10-year, kind of sitting at the 30-day high. Somewhere near that median range, I would say, for the last 3 months, and right in the middle of where we've kind of bounced around over the last 5 days. 30-year fixed comes in at 6.81 now for 3 readings straight. Okay, for my hot sheet peeps, we're going to break the news later today. Okay, we already announced it inside of school for BAMX members. I mean, this is kind of what we leak stuff out to the BAMX members first, but we have a huge announcement that we're going to be making publicly here today for the entire BAM community. Whether you're in BAMX or not, this is a benefit to you. It only makes BAM better, brings more value into BAM. Today, we will be going live with the announcement that if you're in the industry, you know this name, Sharon Srivatsa has officially joined BAM. He's going to be on the board. Eric wrote this: we believe nobody aligns more with our vision than Sharon, and we are honored to have him be a huge part of what we're building here at BAM moving forward. Sharon believes in BAM. He believes in BAMX. So members, you guys have now been gifted a 6-part productivity playbook. It's available right now inside of BAMX. If you want to get access to this and you're not a member yet, just go to school.com/BAMX. These classrooms continue to get better and better. And now the Sharon Srivatsa, let's find it here. Sharon Srivatsa Knowledge Bank is open on BAMX. The productivity playbook is up. Sharon joining the BAM board and going to be bringing a whole bunch of new value to BAM. Jump into BAMX today. You get grandfathered in at current price. You can try it out for the next 7 days. You can get access to Sharon's productivity playbook right now by going to school.com/BAMX and get access to all the new content every single week, classrooms like Sharon's, as well as all of the hot sheet every day. The hot sheet slides that I use right here on this show, as well as my show notes each and every single day, all on school.com, SKOOL.com/BAMX. Sharon Srivatsa, welcome to BAM. We're announcing it. I'm telling you guys on the hot sheet before we even announce it on IG, and the article goes up. We'll be announcing it today, joining the board, and as a gift to BAMX members, put his productivity playbook inside of the community. More to come, more exciting news to come with that. Hope everybody has a great start of their Tuesday, or if you're listening to the replay, appreciate you. If you're listening over on Apple or Spotify, love for you to leave a review there. Subscribe to the channel. But this is the free and simple way to support us, and we've got a whole lot more planned coming with BAM. Appreciate you guys. Until next time, toodaloo.